Hello, fellow Rebel Capitals. Hope you're well. Gold, whoo, really going up today. So this begs the question, should you buy, hold, or sell? I think I'm going to give you an answer that you're not expecting right now on this video. But before we get into that answer and my prediction and what I'm doing with my own portfolio and what I'm putting on the watch list as a result of gold doing what it's doing, before we get into that, let's go over to the details to see what's happening with the price action and look at a couple charts here. We've got the screen share going. Let's go over to CNBC. And gold is up almost 3% today. Let me refresh this. Come on, come on, come on. Okay, we'll assume that is refreshed. And let's zoom out. Well, thanks, CNBC. That took a while. And what you'll notice with gold, and I talked to Patrick Ceresna about this the other day, is it likes to consolidate, go way up, consolidate, go way up, consolidate, go way up, at least when it's in a bull market, which obviously, obviously it has been. When we go back to this chart, we see that it was, boy, I almost forgot how low it was back in even the end of 2022. So Q4 2022, it was at 1650. Man, that that is a bull move for sure. And thank goodness I had a lot of gold. That was kind of that's, as you guys know, that's the pillar of my portfolios, regardless of what the objectives are for each portfolio. But although gold, now let's zoom in, go to a 3-month. And although gold has gone way up and it was up big today, like I said, almost 3%, we can see that it's kind of in this consolidation type of mode and churning a bit, at least for the last 6 weeks. So right now, I would not be a buyer of more gold. Doesn't mean I'd sell. But there is something that I would definitely consider buying. Now, this is not investment advice. This is just what I'm considering for my own portfolio. I want to be crystal clear. Let's go over to a chart of this one, the GDXJ. The Junior Miners ETF. Most of you know this one. And before we get into this chart, I want to share with you a story from an interview I did today with my good buddy Hugh Hendry. And Hugh was talking about what he likes as far as or what's on his watch list, let's say, within his portfolio using his investing framework, which is very interesting. And Hugh is very difficult to follow his train of thought. But if you do, you can extract some incredible insights because he has a way of looking at the world that is obviously very unique. I mean, you can tell that by looking at Hugh. So I strongly encourage you guys to watch that video, that interview. We should post it up on the Rebel Capitals interviews channel tonight. But one of the things that he was talking about as a hedge fund manager, he always liked to see things coil. That was the word he used. And what he was referring to specifically is long-term kind of basing effects within a stock or an asset. And then to see all of a sudden something happen to where it breaks out of that consolidation or that churn, that bottoming effect, whatever you want to call it. And what was interesting is we did not talk about the GDXJ today, but I just went on to a chart actually prior to doing this video because I wanted to talk about gold today because of the big move. And I kind of started with this is an all-time chart going back to 2010, as you can see. But if we go to like a 1-year chart, look at that. Look at that candlestick. You see, we have this resistance level. And Hugh was talking about the longer the longer you've had that resistance level, the longer you've had that bottoming out, that basing effect, usually in his experience, or often, when you see a big break above that resistance, the longer it's coiled, the bigger the spring up is going to be. And I'm sure you guys know that usually you have the gold moves first, the minors, the majors move next, and then the juniors usually move last. But when the juniors move, they usually move to a much more significant degree in terms of percentage than the metal itself. And so knowing that, and then listening to Hugh saying that this was one of the things that he always looked for when he was running his hedge fund. And then to actually look at this chart, I don't know if I've ever seen a chart that looks more like what Hugh was describing in the interview that we did today. So you start here. This is what caught my attention, because you've got this, let's just say, resistance right around 66, 67. And then today you've got this big move, good looking candlestick. We closed the day almost at the highs. So I don't know if we have a pullback. I don't know what happens over the next 2 weeks. I just know that over the next 6 months or the next year, and it doesn't happen all the time, but very often this is very bullish. So now let's go back to, looks like April. So you can see we had the same type of, a little bit of resistance here. And then you can see that gap up. This would be good, but then it goes up, 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 and then kind of down and back and down and back and kind of churn a little bit. And then we have another boom, big move up here. So I'm not a good enough trader. I mean, I'm terrible at trading. So don't listen to me about the short-term stuff. But I know that this is a very interesting chart. And it's one that you should definitely be paying attention to, especially if you like gold. Because, the problem with my portfolios right now is I actually have too much gold as a percentage. So I would like to, because, I started with 10, 15% in each of the portfolios, and it's gone up so much in price that's now it's a bigger percentage of the overall portfolio. So what I'm thinking about doing, and again, this is not investment advice, just what I'm considering, is selling some of my gold, parlaying that into the GDXJ. But what gets really exciting is this is what caught my attention. But when we zoom back out to that all-time chart, look at this isn't just a basing pattern. This is where it's done nothing for, call it, since 2013. 2013, you're at 66. So if you would have bought in 2013 and just held, you would have got your ass handed to you in real terms. Because in nominal terms, okay, fine, you're even. But obviously, we've had some significant consumer price inflation. So in real terms, you'd be losing purchasing power on that bet. But let's just focus on the nominal stuff. So you're pretty much flat since 2013 up to today. And then we had this kind of high right around, call it 55 or so, right there. And then you get this right around 66, looks like the high. And then down again, and it keeps going. Now, to be clear, both of these would have been a buy signal based on what Hugh was talking about today. So let's just assume that we go back in time to May of 2016. If we would have seen this, you could have made the exact same argument that, oh, look at this, it came down, it had this bottoming pattern, and then it jumps up over this resistance line, and that's good. And if you would have bought there and not had the risk management to go ahead and sell when you were proven wrong, you would have done nothing. And same thing here. So we've got to keep that in mind. So what that means is that if I do buy this, I'm going to put a very tight stop on it. And if it, let's just say I buy it at 69. Let's say we have a little bit of pullback tomorrow and I buy. If I buy it at 69, I'm going to make sure that, I don't know the exact number, but I'm going to cap my downside at like 60 or so, maybe even higher, just to make sure I don't buy here and it turns into another one of these or another one of these. Now, keep in mind that let's do this actually. Now let's compare what was happening to the price of gold back here. And I'll bet you we're going to see a much, much different story. So just so we can get a good chart, let's look at the GLD and just use that as a proxy for gold, because I know that's going to be a good chart on TradingView. Or on CNBC, the charts aren't very good. Because I want to compare time frames here. Let's go over to a candlestick. Let's go back to all time. Yeah, see, this is where it's different. And this is making me even more bullish, quite frankly, guys, because gold, those other times in the past where you had what could have been perceived as a breakout back in 2016, June, and in, call it June of 2020. Let's see what gold was doing back then when the chart pattern for GDXJ looks similar to what it looks like today. I'll bet you gold was doing something a lot different. So the first one was, what was that, 2015, 16? So it's pretty much down or flat. It's definitely not doing this, right? And then in 2020, it's going up a little bit. But my point is now you've got this huge move, big, huge bull move in gold. And you don't really have the same move, not even close, in GDXJ, the juniors. And so I guess another way to say it is I keep bouncing back here, this was not the juniors or the miners catching up with gold. This was not the miners catching up with gold. If anything, this was a bigger move than gold itself. But now I think you could make a strong, very strong argument. This move has a lot higher probability of panning out to the upside due to the fact that gold now has had this big, I'm kind of using my arrow as an example, has had this big bull move. And now the miners are just starting to catch up. There's a big delta, let's say here, big spread. Where back here and back here, there wasn't that big spread between the move in gold and the move in the juniors. So this is really exciting. And it's just really neat to have the opportunity to talk to Hugh and have him walk through this strategy that he used quite successfully for his hedge fund, and then just stumble upon this chart with GDXJ and see not only is it breaking out, but it's breaking out of a 12-year range. And remember what Hugh said, the longer it's consolidated, let's say, usually the tighter the coil is wound and the bigger bang you'll get when that spring actually jumps and to the upside there. So who knows? Obviously risk management's paramount here. I'm going to put a stop in, like I said, at maybe 65 if I put on the or maybe a little lower.
How would you represent the trade? Would you do call options or just go long stock?
No. I'd go long the GDXJ. I just call options. You introduce variables that I think are unnecessary, because usually the move in these miners is just massive. So why you don't really need leverage. I wouldn't personally deal with any of that stuff. I would just buy the GDXJ. Now, if you're really good, like Chris McIntosh or Lynn Alden, or like a pro, obviously you can select certain companies within the GDXJ that will probably outperform. But I'm just, I'm not good enough at analyzing the balance sheets, and I have no clue what makes a good miner or a bad miner, and I just don't have time. So for me, it's all about this. But this is a really, really interesting chart. Now, let's go back to gold because I want to mention something that I recently stumbled across and I've been using to store um, not all, but a portion of the gold I have. And this is Monetary Metals. Now, you guys know that they've been a sponsor of the channel for a couple months, and I know Keith really well. He's the owner. And so I set up an account there just to see how it would go because before I pitched it on the channel, I wanted to make sure that I had an account. I had gone through the whole buying experience or the whole experience of setting up account, the customer service. You know, you just want to make sure. I was very confident in pitching something that Keith was a part of because I know him well. But I just wanted to go through it myself before I started talking about it on the channel. I've been very happy, extremely happy. And the neat thing about Monetary Metals is usually with physical, you've got to pay to store it. But here you can actually store your gold with them and you can get a return. You can get an interest rate, but the interest rate is actually paid in gold. Now, a lot of people don't understand the business model. And I see in the chat, you know, when I talk about Monetary Metals, like, oh, this has to be a Ponzi scheme, or, you know, this can't be real, or it's too good to be true. And I would challenge you to watch the video that we have in the description. Josh will put the link. I did a whiteboard video actually on their business model, and go through that. And once you understand the business model, you'll be like, oh, okay, I get it. I get it. And it's all about leasing gold, and it's usually to like a jeweler or something like that that's trying to hedge their their gold exposure, right? Because with the gold that's in the jewelry that they have in stock, right? Because if they have a lot of gold in the form of jewelry in their on their shelves that they're selling, if the price goes way up or way down, they can be exposed to that, and they don't want to have that exposure. They just want to simply have, you know, if I buy it, or if I created the gold necklace for this much and sell it for this much, I'm totally cool with that 30% upside. I don't want to take any price risk for gold itself. So that's usually when a jeweler will call Keith and say, hey, I want to do one of your gold lease programs. And then that's how it kind of works. And then they do it for maybe 6 months or a year. And then the jeweler often just kind of rolls it over because it makes sense for them, because they're just hedging their inventory and they're happy to pay a 3 or 4 or 5% interest rate paid in gold to have the opportunity to hedge. But if you've ever thought of, if you've got some physical gold and you're sick and tired of paying to store it, and you thought, well, boy, that would be nice if I could actually get an interest rate on it, like we used to be able to get in a bank account. But the super cool thing is that interest rate is not just paid in dollars, but it's actually paid in gold. And so if you think this is a neat idea, which it is, then you can check out monetary-metals.com/gammon. And if you're still a little confused about the business model or how they're able to pay you that return, just give them a call. Just give them a call. And they're really nice over there. Tell them George sent you. You heard it on one of my videos. You're a big fan of the Rebel Capitalist show. And they'll be happy just to walk you through it to see if it's a good fit. And what you get is, let's go here. You get this online portal if you set up an account with them. And if I just put in my email and my password here, it gives you, well, I can just do that real quick here. Josh, go ahead and hide the screen, please.
Yep.
Okay, thanks. I just want to show everyone what kind of the online portal looks like if they set up an account. Let's see. Okay, you can go ahead and share it back. Can you see this?
Yes.
Okay, so this is my account. So I've got $42,000 worth of gold in there right now. And again, it's not all the gold I have, it's just a portion. So I want to see how this is working out. And it's working out really well. I've got 27,000 that's committed to their leasing programs, and then 14,000 is kind of committed to the next lease that's available. So on that, I'm getting 4%. On this, I'm getting 3.15. And then you can go through and you can check out the different leases that are available. And like I said, it's usually like jewelers. Few in the States, a lot outside of the United States. But you've got the ability to go in there. And if you don't like one of them, you can just go ahead and click it off, and then you won't participate in that lease. So it gives you a lot of control. And then it shows you the amount of interest that I made. It looks like in May was $162 paid in gold. There you go. And what I really need to do is get this 14,000 into the leasing program so I can start earning the interest. I don't know if that 4% is on 14. I think this 14 is in holding pattern to go into the leasing program, and that's what's going to increase my average. But again, that's a question for the customer service folks. This is what it looks like on the back end. It's very straightforward, very easy, user friendly. And if you don't know what button to push, just go ahead and give them a call. So I would, for those of you, and I know a lot of you watching this video, of course, are going to be into gold. Just go ahead and check it out. Now, getting back to me being super excited about not just gold, but more so the junior miners. Now, Josh, have you listened to McIntosh? I would love to give people some of the miners that he's been discussing in his research. Have you paid any attention to that?
I don't know what he's buying right now.
Okay. So, I mean, one thing that you could do is follow Lynn Alden on Twitter, follow Chris McIntosh. They're my partners in Rebel Capitalist Pro. They're the ones that really get into the nitty gritty as far as which juniors are the best. But you know what you can do today, guys? Honestly, I would just take the financials for some of these juniors and put them into ChatGPT and just build a GPT. You know, Manus, the AI, is one of its specialties is analyzing balance sheets and financials for publicly traded companies. So I would try to see if I could leverage AI to go ahead and analyze the junior miners that maybe were in the GDXJ to figure out which ones were the best. And then maybe I just go in on those just to kind of try to get some alpha instead of just taking the beta. Josh, that's what we should do.
Yeah, I was thinking that's a good idea.
That's a good idea. All right. So on that bombshell, we gave you some good actionable insights today. You guys enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism, and we'll see you in the next video.